When I started trading 8 years ago, I had no idea where to start. Tons of concepts and terminology I couldn't even begin to wrap my head around. So I've decided to make this video for complete beginners in the trading game to make all the concepts as easy to understand as possible. It's time to do away with the headaches and explain everything in plain English. I have a good feeling that by the end of this video, everything will start to make sense to you. So let's get into it. First off, let's cover the difference between trading and investing. Trading is buying or selling for minutes, days, or weeks, where you don't actually own the underlying asset that you're trading. Investing is buying and holding for months or years, and you do own the asset that you're investing in. Next, markets and pairs. A market is just the thing you're trading. For instance, Bitcoin, abbreviated to BTC, or Ethereum, abbreviated to ETH. Markets are shown as pairs. For instance, BTC USDT, or in traditional markets, Euro USD. A pair basically just means the price of the first measured in the second. It's like saying a shirt costs $30. You need the in what, aka dollars, to measure it. Next, charts, time, and price. The x-axis represents time and the y-axis represents price. When more people want it, in other words, demand increases, the price rises. When less people want it, in other words, supply increases, price drops. Now let's cover candles. Candles are the rectangular squares you see that make up the charts. Each candle shows an open, a high, a low, and a close for a period of time. In other words, a time frame. The bodies are where the candle opens and closes, whereas the wicks are where price reached to within that candle's existence. Now, what's a time frame? A time frame is how often a new candle prints. For instance, if you're on the 5-minute time frame, that means a new candle prints every 5 minutes. And if you're on the daily time frame, a new candle prints every day. Now, longs versus shorts. If you're in a long position, that means you're entering into a position in the market where you think price will rise. If you're in a short position, it's the opposite. You're entering into the market thinking that price will fall. Next, on to order types. Now, there are multiple order types a trader can use, but for now, let's keep things simple. I want you to focus on just 2 order types, market and limit. These orders will be either how you enter into your positions or how you close your positions. Both, of course, have their advantages and disadvantages. For instance, an advantage of market orders is that it takes you in and out of positions instantly. That being said, when you use market orders, you incur fees and potentially slippage. On the other hand, you have limit orders. The advantage of limit orders is that there are no fees and no slippage. That being said, the disadvantage is that you have to wait for your order to get filled. In other words, when it interacts with enough market orders. Now, let's map out a basic trade setup. First, you have your entry. This is basically where you start your position. I'd highly recommend using only market orders to keep things simple as a beginner. Next, you have your stop loss. This is where you admit you're wrong on the position and have an order in market order form to take you instantly out of that position. These essentially act as safety buffers, mean you only lose what you risked on the position. Never ever skip putting stop losses on your trades. They will help you avoid big losses early in your journey. Trust me. Next, you have take profits. This is essentially where you intend your position to run to and where you intend to close the position. For these, I would recommend using limit orders as it just means you'll save on unnecessary fees. Next, risk to reward ratio, otherwise known as R. This works out the distance from both your entry to your stop loss and your entry to your take profit. If you're entering into a long position with price at $10, your stop loss at $9 and your take profit at $13, this is a 1-to-3 risk to reward ratio, otherwise known as a 3R long. On the flip side, if you're short, entering again at $10, stop loss at $11, and your target now at $7. This is again a 1-to-3 risk to reward ratio short, otherwise known as a 3R short. As a good benchmark, I'd only aim to take trades that are 3R or more and skip anything under. Next, position sizing and risk management. You should always be risking a fixed amount of your total account balance. For instance, 1% or 2%. If you have $100 in your account and you risk 1%, then of course you are just losing $1. That being said, even if the risk seems and sounds very small, I recommend only paper trading at the beginning of your journey. This means not applying any capital, simply documenting your trades as you go, only applying capital when your stats tell you you're winning enough to do so. Next, onto margin and leverage. Margin is the security deposit you set aside with the exchange to hold a position. Think of it like renting a bike. When you rent a bike, you leave some cash with the store so the shop trusts you. In trading, margin is what protects the exchange if your trade goes against you. Leverage is something that allows you to control a bigger position than your deposit allows you to. For example, if you have a $100 margin and use 10x leverage, you now control a $1,000 position. Now, this all sounds well and good, but both the upside and the downside get multiplied, so you have to be very careful when using leverage. Personally, I suggest using 1x isolated leverage for both longs and shorts if you're a beginner. This means you won't actually be multiplying your capital, but it means you can trade both ways and get used to the functionality of the exchange. Now that you understand the basic terminology, it's time to learn to actually trade and read the charts. This may seem daunting, but worry not. I've got a full comprehensive trading course here on YouTube that will take you from a complete beginner at ground zero to pro level understanding in just 8 short videos. So what are you waiting for? Click the link and get stuck in.